I'd love to introduce you to our speakers today. Feras, Moussa, and Brian Murray. Honored to have them both here. Feras turned to commercial real estate investing after an illustrious career in tech. Crazy coincidence is that we lived 3 minutes away from each other when he lived here in Seattle. I was like, man, I wish we knew each other back then.
Probably like 45 seconds.
45
closer,
seconds.
yeah.
I know, it's like so crazy. But I'm glad that we finally met though. So Feras started Disrupt Equity with his partner, Ben, after seeing success with his initial rental portfolio. They now own 2,000 units and are continuing to scale up by partnering with other major players in the industry, like Opendoor Capital. Which brings me to my good friend, Brian Murray. Brian and I met at a mastermind in Maui about 4 years ago, and it has been remarkable to see Brian grow both professionally and personally. He is like nothing short of an inspiration. So I don't know why it took me this long to bring Brian on here, but I'm so glad he's here. And this is a funny story, Brian, I have to say it. When I first met Brian, yes, he was the owner of a successful commercial real estate and property management company, Washington Street Properties, but he didn't have an Instagram page. And he was very popular. Like he had written the book, Crushing It in Apartments and Commercial Real Estate, which was the bestseller in commercial real estate, like amazing book if you haven't read it. And so we were like, Brian, you need to have Instagram. And we actually set up his page together. And I think his first picture that he ever posted actually has me in it. And I don't know if Brian remembers this, but it's the truth. Fast forward to today, Brian co-founded Opendoor Capital with one of my favorite people in the world, Brandon Turner. And he just ran an ultra marathon this summer. And our friends were all there to support him. And man, he crushed it. He also co-authored the Multi-Family Millionaire Volumes 1 and 2. So it's been quite the year for Brian. Go, Brian. I mean, I'm just so impressed. He's always impressing me. So the reason I wanted to bring on both Brian and Feras here today was because their two companies, Disrupt Equity and Opendoor Capital, now partner on very large multifamily projects, giving investors incredible opportunities to invest in their deals. We hear more about this partnership and how it works a little bit later. And we also have a super exciting giveaway, okay? This is the first time we're ever doing this. So you have to get ready and you have to compete to win it. Okay, so Feras and Brian will be handing out one free ticket to the Multifamily Investor Network Conference that Feras puts up in February in Houston. All you need to do is use the chat and tell us why you deserve to go. They're going to pick a winner at the top of the hour. So 3 p.m., they'll pick a winner. Feras, Brian, welcome to Real Estate at Work. Feras, let's start with you.
All right.
You worked at Microsoft, and just from personal experience, because my husband worked at Microsoft, I know that salaries, stock awards, benefits, and perks can be pretty lucrative. So what made you give that up and jump into real estate?
For me, the day I started at Microsoft, I told myself 2 years and I was going to be out. Before that, I had my own web company in high school. And, then I wanted to be a doctor and realized that wasn't for me. And I switched into computer science. And, I never planned to go to a Microsoft. That was really an accident. I happened to go to career fair and interviewed. I interned with them, and I loved the team. And I'm like, all right, I'll do this for a little bit. And so 2 years and I'm out. And I ended up staying 3 and change because I wanted to leave at the right time of the, within a release, right? I don't want to burn any bridges and have fantastic relationship with them. And ultimately left to start a software company. So I did that for a bit. And like a lot of people on this, webinar, I had extra money I was looking to deploy. So that's whenever I started listening, kind of learning about real estate, and, the rest is history. And I like to say, I love what we do because it's the 3 things I like: people, number, and systems. And for most tech people, right, maybe the people they don't like as much, but they like the numbers and the system side of it, right? So it's a good fit for me personally.
I didn't know that you started a software company first before jumping into real estate, because that was going to be my next question, because most techies go out and start some kind of a tech startup or, do some kind of stock investments. But you did real estate. What company did you start, and how did that transition happen?
So the name was actually 2 Guys in an App. I started with a good friend of mine, and
2 Guys in an App?
It grew more than two guys. I'll put it that way.
Like
so that was not the right name. Yeah, rule lesson number one, don't make a name that's going to limit you, right? So that's why I like to say we're not disrupt multifamily, we're disrupt equity, right? Anything is, so kind of pick something more generic. And so we were two guys in an app and, did well with that, right? Really built that up. And then we, grew past two guys and we pivoted, and that's whenever, I learned a lot about, marketing and sales and some of these other things I didn't know well enough. And that happened to be the time that I was getting into real estate and started Disrupt Equity and kind of really tailored to that tech scene, right? And, from the get-go, I like to tell the team, we have to be disruptive. We can't do what everybody else is doing, right? Be different. And that is our differentiating factor.
Love it. Brian, can you give us a little background, like a quick overview on just how you got into commercial real estate investing?
I'm one of those people who's like, perpetually changing directions and trying new things. And I started off as an engineer. I went back and got an MBA, and I worked as a management consultant. And then I went to a tech startup that actually worked there for about 5 years. And then I kind of got off the corporate path and started to teach. And I found that really fulfilling, and I enjoyed that, but I missed the income from my executive job at my tech startup, in an effort to kind of like figure out how to make ends meet and build my wealth, which I wasn't going to do be able to do as a teacher. I decided to invest in rental property. And once I got started on that, I kind of never looked back. It turned out to be a great direction to go.
Love it. And you picked the right path for you.
Yeah. It's been great. I continued to teach for almost 10 years as my portfolio grew. And the ironic thing was I got into real estate to make extra money. But then once I started investing and growing my portfolio, I made a commitment not to pull any money out. And that was one of the best moves I've ever made in terms of growing my wealth through real estate was to continually reinvest back in and, make a commitment to get by on my salary for as long as I possibly could manage it.
That's amazing. And so you still had your day job, and then you still hustled and you invested in real estate. That's, a lot of people reach out to me. They're like, hey, we still have our day job. Like one of the big questions that we got or repeatedly got, especially even for this meetup, was like, why did Feras give up Microsoft salaries to go invest in real estate? Just like, how you were a teacher, you were making good salary, but then you went out and you hustled and you took on another big job. Because investing in real estate, like, people make it sound like, especially now with social media, people make it sound so romantic. Like the idea is, it's like easy, you have money, you invest, and then you just grow it from there. But we know just from operating and investing for so long, almost a decade now for me, that it's one of the hardest things that I've ever had to do, because you can literally lose your shirt. So
wait, you guys have had challenges?
Right?
No, it is, right? Like it's, it's funny. Every time I'm reminded that Brian was a teacher, I always I forget that Brian was a teacher. I can see you being a teacher, but then I think of you as a real estate person. So I gotta, it's a challenge. But like you said, it's, right now with social media, everybody makes it look sexy. Right. And everybody likes to talk it up and tell, there's a lot of talk, but not enough walk out there. Right. And, ultimately I tell people you can build wealth in real estate, right? You really can, you can build a lot of wealth in real estate, but it's not a get rich quick thing. It's a get rich slow thing, right? But you do build wealth if you, sit there and work through it and solve things. Because, even on the easy deals, they're hard, right? Like we've hit I like to say we're very robust. We've hit every lending problem that you can probably imagine. So I have a PhD in lending. And then on top of that, operationally, I've gotten to the point where I don't really get stressed out anymore because I've already seen everything. So what could possibly go worse than what I've already seen, right? So,
Yeah, I think there's, unfortunately, there's so many people out there who are kind of still pushing the kind of get rich quick, easy money, passive, income from real estate investment. And, that unfortunately, I would echo everything that Feras said. Like the way you can really build wealth is if you're willing to put the time and effort in. And, there's so many different paths you can take,
Right.
and Feras and I took a little bit different paths, but in the end, we're actually, landed on doing something very similar. And that's why, it's working very well to partner today. But there's there's an unlimited number of paths that you can take with different asset classes, different ways to raise capital, and different approaches you can take, whether you do it as a side gig or you dive right in. And I've met so many people who've built so much wealth and changed their lives going in so many different ways that I'm always reluctant to say, hey, this is the best path, or this is the right way to go, because there's clear evidence out there. And even in my books, like in Crushing It, I was very careful to really preface it by saying, this is just one path. It's, in no way representing that it's the right path. You just hope that you share some things that, people can learn along the way.
It's this is what I always tell people, is that when they ask me what is the best way to invest in real estate, I'm like, look, you have to do something that really excites you. This is the best field to be in because there's no roadmap. You create it. And for everyone, it looks different, right? Yeah, no one's saying hand holding and saying you have to do steps A, B, and C. You could be, but still how it turns out is different for everybody. And so Feras, that brings me to my next question is, you went from small multifamily to large multifamily. And I think scale comes from confidence within yourself and also having the ability to build the right team to get you there. So what did that process look like for you?
So, like I said, this business is people, number, and systems, right? And there are some people that are in it to make a quick buck. And, I think what Brian is alluding to and what I'm saying is that if you spend the time to do it the right way, you can build actual wealth, right? But it takes time and effort, and, you have to want to do the right thing and put in the time and effort, right? And so, for us, it was ultimately we had done that. And, for us, I love building a business. That's the fun part of it, right? Can I, there's always another mountain to climb, right? And can I build a business and build a culture and build an environment that just continues to grow, right? That's the thrill of it for me, right? And, bring on better people than you at everything of every facet, right? I like to know how everything works, but I like to have people kind of go and try to get them to do their piece of it, right? And so, it's a kind of, I like scale, right? Again, coming back from tech, it's how do I make something to where it's so routine that, you can basically rinse and repeat, right? And go from there. And so whether that's the operational side or the acquisition side. And so, for us, like right now with a partnership with Brian and them, right? We have confidence in our partners, right? They can go be the experts at their thing. Hey, let's go focus our energy and effort into go tripling the number of deals that we look at, right? And build the machine for that. We have literally a 2-hour meeting next Wednesday to rip the thing apart and put it back together, right? And so it's ultimately about identifying where you're strong and where you're weak, and either bring on partners or, team members to kind of help do those things, right? Yeah. But with that, again, doing the right thing first. So,
I had a call with my asset manager this morning, and I was like, Travis, thank God for you, because you are everything that I'm not, and I am everything that you're not, which is why we become great partners, because, he's able to complement me because I don't know it all. I don't know, parts of the business, and he's really good at that. But when it comes to going out there, putting yourself out there and raising capital, that's not his thing. So we just complement each other so well. And Brian, it's funny, I'm going back to your earlier point on asset classes and, how to diversify. You started off in multifamily, and then you switched to mobile home parks with Opendoor Capital, but now you're back to multifamily and looking into maybe self-storage. What are your thoughts on diversification for newer investors?
Yeah, my path is even more indirect than that, right? So my first acquisition was actually an office property, and my second acquisition, which was 3 years later, was a retail property. And it wasn't until, and that the first property was through a mortgage assumption, and the second one was seller financing. I was a good 4 years in and still hadn't been able to get a bank to give me a mortgage.
Wow.
And I wasn't really sure what the heck I was doing, and I was figuring it out as I went. And I was, the first one, that office building was very distressed. And, I focused on the turnaround and pulling it out of distress. And that turned out to be my model, which was buy distressed assets that are poorly managed and then add value. And eventually, after I turned the second property around, I did get my first mortgage, and it was a large cash out refi. And that was with the proceeds from that, I bought 3 more properties, and one of those was my first multifamily. It was a 30 unit. And so the model for me, back then, I didn't have a mentor. I didn't know what I was doing. And I just was like looking around going, property management is terrible. Like, nobody seems to know how to manage a property. Like, I could buy,
and that's still the case, for the record.
It's still the case, right? Yeah. So I was like, I could
biggest
buy,
bane of my existence.
Yeah. So I wasn't really thinking like, oh, I need to buy properties that are all the same. I was thinking, I need to find neglect and I need to bring in some love. So,
Right.
That was my model. But then as I started to grow, I started to realize, hey, there's a lot of advantages to focusing. But along the way, I mean, I built a self-storage facility ground up. I did parking. I even owned some billboards at one point. So I was a little all over the place, but in the end, I loved multifamily the best.
Yeah.
And so I had a turning point, and I would say it was probably about maybe 6 years into my investing where I focused almost exclusively on multifamily from that point forward. I still was opportunistic, picked up a couple of commercial properties here and there, but for the most part, I did that. And then actually, when I partnered with Brandon, I was just, I had done a few deals with other partners. And when I was at that mastermind, I shared with the folks there that I was in the process of putting together a team to start my own company where I'd be raising capital, because that's something I hadn't done when I got started. And basically Brandon at the same event was like walking through his plans, and we were like, we're both about to do the exact same thing, him in mobile home parks and me with apartments. And I had also already owned a mobile home park. And he ended up saying, why don't we think about doing this together? And so after giving that some thought, I realized that his strengths and my strengths were very, very complementary. And I don't even think I gave it full credit at the time what that would mean in terms of what we were capable of doing. But to me, I was very passionate about the future of workforce housing. And so my multifamily focus at the time was really more in like C-class housing. And so mobile home parks were to me, they both fell into workforce housing, and I believed passionately in the future opportunities there. And so I agreed to dive into mobile home parks, but there's a lot of reasons why, we've expanded back beyond that, and not the least of which is that's kind of where my roots were, and where Brandon's were as well. And there were a lot of compelling reasons to do that. But, being able to work with a company like Disrupt Equity was just a perfect opportunity for us. So we're grateful for that. It's funny, the event that Brian is talking about, where he and Brandon kind of recognized this opportunity, was the same meetup that Brian and I met at. And so, going and finding those amazing masterminds with just, people like leveling up and finding people that are doing big things, doing things that you want to do, and then immersing yourself in those masterminds, immersing yourself in those conferences, and really networking to push that net worth
is key to growing and being successful in this business.
And actually, I'm going to chime in because I care about this a lot. It's, this stuff works, people, right? Like, being on a webinar is great, but this business to grow, right? Whether you want to be a hardcore passive or a hardcore active, it's all about relationships and the people you meet, right? I met my partner, Ben. I like to joke at the meetup that we have. We have a meetup here in Houston. I guess we've been doing it for 6 years plus, and I like to joke because before I met Ben, it was just, he'd hold his finger to the wind and say, I'm going to do a meetup next Wednesday. Like, no method to the madness, very inconsistent. And, the turnout was inconsistent, right? But I met him there and I'm like, hey, this is someone I like, know, and trust, right? I got to like, know, and trust him because ultimately people want to do business with people they like, know, and trust first, right? And then, obviously started Disrupt Equity and kind of we've been rocking and rolling. And even Brian, right? Like I like to say, I met him because I accidentally sat next to him on a bus ride to a Brazilian steak restaurant. And I'm like, hey, this guy is, a very good guy, right? Because again, you want to work with people that you like, know, and trust first, right? And that also have those same ambitions, the same goals. And so, I tell people I go out to events, even like non-multifamily events, because you just never know who you're going to meet and what doors that may open, right? Exactly. And, that the fastest way to grow, if there's any one thing I tell someone to do, is just get out there and network. You may have no idea what you're doing, but go meet people and, and it's not about being the loudest person in the room, right? Like Brian is not a loud person, right? Like neither, but it's about get to know someone a little bit intimately, right? And that turns into things.
If you want a great venue for that, a great event, Disrupt hosts, multifamily investor network conferences. The one he's giving away, super valuable, even if you don't win it. Like I've been to so many of those. I've spoken at so many. It's so hard to find one where you don't get the hard sales pitch. Right. And so if you're looking for a place to meet people and kind of like get some great knowledge, I'm going to pitch that. Feras isn't going to pitch it himself. So I'm going to be like,
but that's why we
very true.
And part of the reason we put that event on initially was because there wasn't a good event that wasn't a sales pitch. We sell nothing. Like the very first year, the feedback that we got was like, I thought you were going to sell me something. And I'm like, no, just want to create the environment. And it's turned into amazing things, right? Other benefits that we didn't realize. But yeah, it's about networking, right? And, getting to know people, they get to know you.
So on that note, you guys, look at the chat, Brian and Feras, between answering questions. Because we've had some great reasons why people should be there, and you're going to pick a winner out of those people. So make sure to read that. And I'm going to be at that event, and I'm super excited to go and just network. Like both of them said, I think that is the number one key to your success. And then Seattle folks, I'm going to throw this out there. Feras has mentioned that he may throw the next conference in Seattle. Feras, no pressure. But now that I've said it, you have to do it.
I know. It's funny. I've been telling people that like this weekend whenever we were in Orlando, I'm leaning towards Seattle. You just got to make sure that the government's going to let us do it without any sort of big hiccups. All right. And we got to pick a date that we know we can make sure Brian can get out there too, because, we want to crush it. No pun intended.
Wow. I can't believe it's going to be really hard to pick. Yeah, I think Carl, I'm impressed with that response, Carl.
Yeah.
Look at all the great answers though. You got a lot of.
I love it. Our audience, oh my God, this is why I even run this meetup, is because every month I'm like, I think this is the last one I'm going to do, because it is, it takes effort to plan this and put it together. But then the audience is so amazing that I'm like, okay, I got to just keep doing this. And I like the fact that this is a meetup, not a podcast, because our audience can literally get access to my speakers for that hour, which is huge. Okay, so going back.
We have a winemaker offering to bring wine. That's like
I know, go Chris.
Very effective bribe there. But since I'm not going to be there, that's not going to work on me. But I certainly relate to Carl. I mean, we just talked about the willingness to make the sacrifices and the hard work. And so, Carl, I appreciate and respect your story and how much you've put into your real estate investing. And that's I think you're going to look back and feel that was an investment that was very worthwhile. So very impressive.
Okay. It's not even 3 p.m. Are we ready to bring Carl on board? Is it Carl?
Sounds like Carl's the indirect winner.
All right, go Carl.
Yeah, sorry, the unofficial. But here's what we'll do. Whoever
Okay.
else wants a ticket, reach out to me. I'll connect you to the team, and we'll get you. Because for us, we don't make money from this. It's not about making money. So if you're interested, we'll give a special discount to the group. I don't know what that is, but I'll get you connected with somebody on the team for whoever is not Carl and wants a ticket.
Okay,
Yeah,
I'll tell you what.
This is a very generous of Feras, guys. Like here I am like lobbying, and I have no business doing that. It's a super generous gift.
Not a problem.
Yeah, really.
That is so sweet. Thank you so much. I'm going to say, guys, if you are interested, send me an email. I'm putting my email right here, and then I will reach out to Feras and get you guys a discount code or something. That's so sweet. I planned this for us, you guys. I planned this for us.
Of course, like negotiated very hard.
Very hard. No, I didn't even have to try. Feras is that amazing. Okay, so Feras, going back to the kinds of deals that you buy. So you focus a lot on understanding the structure of the deal. Just from everything I've read about you, everything I've seen, you're all about how to best structure the deal, like what kind of variables are at play with the seller, like the seller situation. Could you talk to us about that? Like, what does that even look like for a large multifamily compared to a small multifamily?
Yeah, absolutely. So every deal has its story, right? And it's really, and this is what makes it hard to scale. And I constantly think about this, right? We were literally in the conference room today doing our deal sync, which we do every Thursday. So if someone comes on Thursday, you see us doing that, and just talking through deals and how do we continue to scale it? And the part of the problem is that it's a people problem, right? You have to talk to the broker and understand their story, the story of the deal first, right? Because as much as you want, me including, I want to just run numbers and everything fits in a box, but you have to really understand part of the story, right? And so really getting to know the broker, understanding what the story of the seller is, right? What motivates them and what upside the broker thinks there is. Now, some brokers, portray very accurate upside and they see a lot, right? And at the end of the day, broker's feedback is valuable. Some might push the limits. And so you have to kind of read through that and say, okay, this guy says I could do $500 rent pops. Well, no, but maybe I agree with him. I can get $300 rent pops, right? And then I'm going to call 20 properties around. And we've kind of systematized having the team calling properties around and pulling data to give us accurate numbers whenever we underwrite. But ultimately, it's about getting in there, understanding the story of the deal, of what upside there is, then figuring out what structure can work in that. Right. And I like to tell people I can buy any deal in the world if my investors are okay with it. Right. Can you get the right structure behind it that makes sense? Right. And, right now, this is as much financial engineering as it is operational engineering. Right. You really have a little bit of both. Right.
Yeah.
And, for example, the last deal we did with Brian, and then we layered in a pref piece. Right. So preferred equity piece. It's a very different kind of investor. Right. But by doing so,
can you speak to us about that a little bit? What do you mean?
So all a preferred equity is that it's a chunk of equity that sits in front of the common equity, right?
Okay.
And the idea is that equity gets paid first, but they agree that they want a very fixed amount, no upside. And so what does that do? That actually gives the rest of the upside to the other investors, right? But at the same time, they're basically saying, look, I'm okay to pay that guy first. And so it makes sense for some deals.
When you say upside, what do you mean?
Yeah, so let's just pick an example, right? So on that deal, we did an 11% preferred return. So those investors are only going to get 11%, nothing more than that, but they get paid first. So I like to say it's as close as you can get to saying guaranteed in real estate without saying guaranteed.
Guaranteed,
right?
Yeah.
It's a very safe spot to be in, but those investors are only getting 11%. So now if that deal, I'm just going to use the extreme example. Let's say we doubled that deal. We sold it for twice what we paid for. Massive upsides. Well, those investors are only getting the 11%, right? But again, a very safe position. So it's more like not an annuity. What's an annuity? What's something that you get the money back? It's almost like a bond, right?
Bond, yeah.
But the other investors are saying, look, I'm okay with giving that guy, more upfront, but I want more of the upside, right? So you're basically reducing that pool. And so what does that do mathematically, right? For those that are math inclined, it allows you to shift cash flow into IRR, right? But ultimately, as operators, we have to be very conscious because this is all numbers. And I see these guys that, you can make any deal look good on paper, right? So ultimately, our number one investors are the ones that go and tell all their friends, right? And so how do you get to a number that you can present that's attractive, but also you're comfortable hitting, right? And
Right.
so that's where it goes back to understand the story. Does it all tie together, right? And we underwrite. The math really is, and we really pulled this number like 2 weeks ago. It really was like 150 deals to find the one. Like we've, again, I have it all systematized in our pipeline. And so understand the story, understand the debt, because debt's also a really big piece of the structure, right? Because again, if I can get a deal 99% leverage and raise $1, like even if I paid $1 million, something insanely over for that deal, it actually probably makes sense as long as I can cover my debt service, right? Because, it's, but now is it risky or not? That's a whole nother story. And so as an operator, you're always having to weigh these different things. What is the appetite of my investors? What is the debt that I can get? What is the structure I can put in place? And what is the risk that you want to expose, right? And ultimately, the thing that I struggle with is I feel like a lot of investors don't understand risk-adjusted returns, right? And that risk-adjusted part. And I'm really particular now on risk-adjusted because right now it's a unique environment that we're in, right? And, it's easy to say this deal is going to give a 20%. But I'd rather raise more money and say it's going to give a 15%, right? But it's so much safer because you're sitting on a big cushion. And so as an operator, you're weighing all these things to find the right balance that can help, that can make sense to get the deal done while also attracting investors and the debt that you need and, something realistic on operations. So
do you have any, I don't know, like books, podcasts that you recommend for someone that is just now getting started with large multifamily, going from maybe they own fourplexes, maybe they own triplexes, maybe they do single family fix and flip, but they want to do like larger 20, 30, 150 unit deals. What is the best way for them to make that switch to get started?
Yeah. So, okay. So you asked two questions, a book and then best way to make the switch. In terms of a book, I really don't know a book that is more thorough than the book this guy happened to write. His name is Brian and read. And so, the book is amazing in terms of just, it covers a lot of breadth, right? It's not about being the expert in any one thing, but a lot of our business is about just understanding a lot of things enough to get through it, right? Which maybe leads as a segue to answering your second question, which is how to really get started. And it's ultimately, I like to tell people it's finding partners that have maybe done it and find a way to add value. And that goes back to why we go out and network, right? We've partnered with people to help them learn because I like to say people are going to be successful with or without me, and I'd rather it be with me than without me kind of thing, right? So how do you, there's a lot of people like that, right? And so go find someone that is a similar space. Maybe they don't have, there's a lot of ways to do this, and I don't want this to take over the meeting, but, liquidity, net worth, balance sheet, sourcing a deal, boots on the ground, construction management. These are all different ways to add value to somebody. And so, maybe, Leica's stuck in Seattle. She can't travel anymore, right? But she's trying to buy a deal in, I'm going to pick on Topeka, Kansas, because that's what me and my partner always pick on. And she meets someone that's based in Topeka, Kansas. Well, that's like a good, partnership possibly, right? Okay, you go, I'll talk to the brokers, I'll do this and that, and you go tour the deals, and whenever I buy a deal, you're going to manage the construction and keep an eye on it. And great, we can go do something, right? And so that's how, because I think a lot of people, everybody starts with the duplex, the 4, the 5, the 10, the 20, right? And I like to say, I almost did, my first one was going to be a 32 unit that I was going to buy myself that I'm glad I didn't win, right? Because then I found out about just, the scale factor, right? It's better to do a 100 unit deal where you have dedicated staff than a 32 unit where I would have been distracted and, spent all my time on that. And so the answer to me is just, get out and find someone that fills your gaps.
Brian, do you have anything to add to that?
No, I think, I think Feras did an awesome job. I completely agree 100% with everything he said. And that's part of why it's really great that, Feras and I are working together, because when we sit down, like we quickly see eye to eye and like we're thinking about the deals the same way. And it's been awesome. The only other thing I would add that comes to mind, and this is particularly true at Opendoor Capital, but a lot of our sourcing and criteria that we're applying is driven by thinking about the sale at the time you're buying, like who's going to be the end buyer of the asset. And that's part of I would say that's probably one of the biggest changes that I made immediately when I joined with Brandon, in terms of what they had initially started with, was to just think about, hey, wait a minute, down the road when we exit, who do we want our buyer to be, and what type of criteria should we be applying on the front end in order to get that buyer on the back end and get the premium that we want on the property. So, our sweet spot in the mobile home park space, it's basically to buy a park that is maybe not currently institutional grade, but there are one or two or three things about it that we feel confident that over time we can change to make it an institutional quality asset. So that's perfect for us because you'll go in and you'll pay a price that's maybe lower because you don't have the large institutional buyers chasing after it, because maybe the occupancy is a little bit low, or maybe there's some repairs that need to be made. But then during our ownership, we can turn it into an asset that a large institutional buyer would be excited about. And then we execute on that business plan with the idea that on the backside, we're going to get a premium on the price. So it's just, it's really, I don't know if it's as important with the smaller investments, but you still want to think about, what's everybody looking for and paying premium for, and, create a product that, an asset that
delivers.
And one small thing to add to what Brian is saying, and I'm sure he agrees, is you're painting a story for the next person, right?
Right.
And so if you're, you have to make sure there's a story there, right? I was actually telling this today to somebody, which is, the broker goes out there and they tell everybody that you're the worst operator, right? So there's always an operational story to every deal, right?
Yeah.
And then they go out and they talk about the upgrades. Now, if you have a property that's updated to the T, right? No value add, no hypothetical value add. The broker can't even make up anything that makes sense because it's already the top of the top of the top, right? That may, your buyer is a very different person than maybe the someone, because, people ask, why do we sell, right?
Right.
We sell to lock in returns for investors, but also someone will usually pay me a premium for the deal because they will bring fresh capital, right? Our capital's already been deployed into the asset to improve it. They'll bring fresh capital to take it to another tier. And for doing so, they are willing to pay a premium, right? And so you want to have, you want to understand who the buyer is. And it's not that every deal needs to have a big value add component, right? Because like Brian said, some deals, the story is, hey, you know what? This deal could go to institutional because now it's an institutional grade asset, and it could also go to a syndicator because it also makes sense for them. And so understanding the options that you have and the runway you have as well, right? Which is back to getting into debt and engineering, something that makes sense.
Exactly. So we're going to take a quick break from just our main speakers, and I want to spotlight an audience member. So here's what happens. Every time we do the meetup, we send out the form to fill out, right? You can't enter the meetup without filling out a form. And the reason we fill out a form is so that I can better understand my audience. And when I look at my audience, it blows me away how every single time there's, I want to say 60% that have been investing in real estate for 1 to 4 to 10 years, but then there's a 40% that are new to investing. And so I always like to showcase newer investors just for a minute, to say, okay, how did they get started? Because I feel like those early days of investing are literally the hardest. You don't have a network, you don't have the money, you don't have any kind of experience, you don't know which direction you want to go in. And so it always blows my mind hearing from someone that's just getting started, like, all the challenges that they're facing, and still showing me the grit and the hustle they have to make it. And so I want to bring up literally my favorite people in the world, and I just met them, the Donis brothers. I lovingly call them the Jonas brothers of multifamily real estate. So I'm going to bring them up here. Hi, guys. That's Kerwin, Kenneth, and Jeffrey.
It's a pleasure being here. Thank you so much for having us. Yeah.
So, this is what attracted me to you guys, was I watched a video on YouTube about how you spoke about your background and, really like your upbringing. And I'd love for you to share that with our audience. Just, how you were raised, who you were raised by, and, how you ended up in North Carolina.
Yeah, so I can kind of start us off. We come from a low-income background. Our single mother, she was an immigrant from Guatemala. She came here when she was very young. Eventually, she moved from New York down to North Carolina to raise us three, as well as an older sister that we have. Fast forward to when we got into real estate. We were 18, and Kenneth kind of was the first one that took the leap of faith. So he can kind of take up from here.
Yeah, so I mean, I was just sitting in my college apartment, and I came across wholesaling by watching The Breakfast Club. And at first I thought it was a scam. So I just did some research and found out that it was an actual business, and, people were making tens of thousands of dollars a month. And that kind of broke the paradigm of, going bigger. So then that kind of shifted my mindset that I could potentially do more than I was actually currently thinking at the moment. So that's kind of what got us into real estate.
Yeah, and a big part of our why is retiring our mom. That's why we got into the single family space, and we quickly realized that the passive income goal we were aiming for, it was more aligned. Multifamily was more aligned with what we were trying to accomplish. So that's why we moved to the multifamily space in early 2021. Yeah, so we started wholesaling for about 13 months. We invested a lot in mentorships and stuff like that. We got into creative financing. We did a fix and flip. Fast forward to today, we're now a part of the Multi-Family Group. I believe Feras has actually worked with them before. And I think we're working on a deal with Feras now, but yeah, we've
No
done.
way.
Yeah, I think so. That we're going to close on a
Okay.
deal in Atlanta, the Life at Marketplace.
The one that we're putting pref equity into. Gotcha.
But anyways, we had done like 2 syndications at this point, and we're closing on our 3rd one, hopefully next month. So as long as everything goes well, it's really, we're just, I guess, here to inspire and show anyone that, like, if we can do it, I think anyone can.
So I want to go back. You guys are now, like, how old are you right now?
So I'm 23 years old. I'm the oldest, and they're twins. They can.
Yeah, we're 20. Yeah, we're 20.
And you guys started 3 years ago.
Yeah,
So
we
you
were-
were 17 and 20.
Yeah, yeah.
So we had found out, this was I found out about wholesaling in 2018, spring 2018, and we didn't really start taking action until end of 2019, October, November-ish. And so, it's been about 2 years now within real estate.
Yeah, almost 2 years.
You guys, that's like when I was 18 years old, I was not thinking real estate. I was not thinking, wow, I want to, build generational wealth or, retire my mom and dad. So much kudos to you. That video that I watched on YouTube, if you guys have a link, you should post it to the
Yeah,
group chat, because it was so inspiring for me. Like, I had a tear in my eye. I was like, this is amazing, because so many of us take so much for granted, right? Like, we invest in the books, we watch TV shows, we go to all these conferences, but then we don't end up doing anything from it, right? So I feel like you had such a massive why that you were like, okay, I'm going to make it, and that's it. And the other thing that you guys did, I think that was so profound, even at your age, you guys, they started wholesaling. They took the funds from that wholesaling to go invest it into conferences. And that's how they got to like their first conference. And then going and joining a mastermind like Think Multifamily, which, I've only heard great things about, and like building your tribe, building that network, and going and meeting people that are far more advanced in their careers than you. I think that can only set you up for success. And it's amazing that you're working on a deal with Feras.
Yeah, and like Feras touched on, I think that's the biggest thing that we've learned. And Kerwin loves to say we invest in relationships. So pretty much all the profits that we have made at the beginning was just invested in conferences, mastermind groups, going to networking events. And that's really what we credit most of our success to, is just being really good at networking. Because that's the one thing that we will brag about. We are good at networking. We're good at like walking up to people, regardless of our age and our experience. We'll just walk up to anyone. So it's paid off in ways that we never expected it to. And I highly recommend, like Feras said, people go out to events. Don't be afraid to spend money on things like that.
And we went to the MFIN event, and
Yeah, we highly recommend his event.
it
It's
was
very
fun.
good. Yeah,
Very good event. Awesome
Thank
people.
Yeah.
And just a good time overall.
yeah.
So, I mean, I did want to touch, so you had said, I mean, my brother mentioned, we come from a low background, low income, single mother. So the reason I think we had actually spoken a few days ago, and to give people context, we actually went to Guatemala for the first time and met our family for the first time, like cousins, our aunts and uncles, in the end of 2019, so December 2019.
Yeah.
And we went there and saw, where my mother was raised, and the village that she's from, and we see like we saw that our family is actually still living in some form of poverty. So that was kind of what lit that fire, because like my brother likes to say, we were one,
Yeah, we're one generation away from that extreme poverty. So we always like to say that we won the American lottery by being born here, because it was just my mom's decision to move us here.
Yeah. So, after that, seeing that, we kind of just saw, we had an opportunity that we can take on, and yeah, it's been fun.
That's amazing. And you guys, your mom moved here when she was 18 years old, yeah?
18 years old, yeah.
Wow. And you have an older sister, and it's 3 of you.
Yeah, correct. So just three boys and one older sister.
Okay, so with regard to just doing commercial real estate, right now, what you're doing is raising capital, right?
Yes. Yeah. So that's how, mhm.
Yeah. So
we're on branding, we have a podcast too.
Yeah.
So we kind of just like putting a lot of content out there. We're on all platforms.
Mm-hmm.
Yeah, Real Estate Monopoly podcast.
Yeah. And at Donis Brothers on all platforms. But I did want to say one thing that we've come across, not everybody has the opportunity to invest, whether that's passively or actively, just because of the fact that the barrier to entry, as a passive investor, minimum, 50,000 typically as a minimum investment. So we're actually working on some things that, we're very young. So the young crowd, the youth, they're very smart. They just don't have the, they don't have the ability to invest in these assets. And we truly, truly believe in real estate. So we're working on some things that we're going to bring to the marketplace, and we'll actually be able to pretty much lower the barrier to entry for the youth or just anyone that's really looking to invest and believes in real estate. So if you guys want to follow us, we will be releasing some more information on that here.
I love that. And when you guys do release your product and you bring it out to the market, like, you have to send it to me, and I'll try and, we'll all market it for you, because that's a great idea. Like, I meet so many 20, 23-year-olds that maybe don't have as much money, but they have $10,000 or $20,000. And if they could put it in a deal with you guys, it's like completely setting them up for long-term success. So I would love to promote you in any way possible. So please do keep me posted. And, like they said, they do have an amazing podcast, and I've listened to some of their episodes. So if you guys don't mind, like, putting a link to your podcast, have some pretty awesome guests, and we'd love to listen, and we'd love for our audience to listen too.
Thank you so much.
I appreciate it. We'll throw all of our information in the chat, and
awesome.
If anyone has any questions, feel free to reach out.
Yeah, we love to connect with everyone. So thank you.
Yeah, and then, like I said, you guys, we are hosting our first in-person meetup in Raleigh with me and the Donis brothers. So please do send me an email if you're in the area, and we'll send you an invite for that.
So you guys look forward to it. Yeah.
You guys, I can't wait to see you in person in a couple of weeks. And thank you so much for joining us. You are such a pleasure to watch grow. And so I'm just kudos to all your success and congratulations. We will have you back here when you have your next product released, and I can't wait to see what you do.
Thank you so much for having us.
Yeah, it was a pleasure.
Bye.
Bye.
Awesome. Like, okay, how inspiring are they?
It's good. It reminds me, I have a younger brother who is 20, and I feel like I need to connect these guys. My brother is sipping that wholesaling cool, and people think what we do is hard. Like, wholesaling is hard.
Oh my God.
Flipping is hard. It's just total grind of a business, but you grind your teeth, you learn.
I first started out thinking I'm going to send out direct mail and go find my own deals. And literally about 6 months went by, and I'm like, no, I'm not cut out for this. I'm just going to call the brokers in my area and get deals through them, like through my wholesalers. And I have never found an off-market direct from the seller deal myself. And I'm okay with that. That's not what I'm cut out to do. So coming back to Feras and Brian, I want to talk about how Disrupt Equity and Opendoor Capital came together. So you said that you were sitting on a bus ride, you were sitting next to each other, and you kind of connected that way. Like, where were you guys? What brought you together in the world?
So where were we? Was that in Denver?
I think we were in Vegas. Were you at the one in Vegas? I can't remember which.
No. That was not Vegas. No. It was not. I was not at that one.
Maybe Sarasota, or I can't know.
It was either Denver or Sarasota or San Diego. Maybe it was San Diego, actually. It might have been San Diego.
Yeah. So we're both in a mastermind where we were at the time.
Yeah.
It's called the Multi-Family Boardroom.
Okay.
And so that pulled together primarily multifamily syndicators from around the country. So that was a really, really a turning point for me being part of that mastermind, because now, the first time I showed up at that mastermind, I'm looking around at all these other investors, and they're all raising all this capital. And I'm like, oh, I didn't know you could do that. So
Wow.
I guess I kind of did, but it always seemed like so complicated and not something that I would, do. And they were all looking at me going like, what the heck are you doing? Like,
Well, it's funny. I was looking around and I was like, half these people, haven't, like, sure, they can raise some money, but they haven't really like done it. Whereas like Brian, like was saying on his story, like he had actually like done some of the hard stuff and the nonsense and the drama. So they got a different perspective, right?
Yeah, it was great for me, just to see what people like Feras were doing. It was really eye opening, and it was for me it was a turning point. And there were a handful of people that I met at that mastermind that really impressed me, left an impression, and that I said, you know what, if I ever have an opportunity to work with one of them, like down the road, that's something I'd be very interested in. And I don't know, like, I actually think the fact that I spent so much time in the tech sector, and that's where Feras came from, I think your minds kind of tend to, I was an engineer, and I've noticed that like people that come from that kind of background, it's almost like your minds work in a similar way. And so you can relate on another level. And I think Ferris's approach to business is very in alignment with how I think. And so we kind of were on the same wavelength. And so when we at Opendoor Capital, when we decided to get into apartments, and I was the partner who got tasked by the team to investigate, how are we going to do this? If we want to get into apartments where we've got the ball rolling on mobile home parks, like what's the best way to do it? And so it really came down to, hey, do I want to risk disrupting? Maybe bad choice of words, but do I want to risk kind of rocking the boat on this great machine that I've built on the operations side for mobile home parks, and kind of distract our operations team with the apartments, even though we have experience there, and I've got my own management company there. And I think what we settled on is we realized that if and only if we could find the right partner to work with, that we could leverage our capital raising engine and some of the other balance sheet and capabilities and experience on our side, and just kind of like who would be, if we could find the right partner to not have to distract our operations team, in that, then we could bring a lot of value to the right partner, and they could bring a lot of value to us. And I had stayed in touch and really been more and more impressed with both Feras and his partner, Ben. And so when it came time to think about, hey, who would we want to explore something like this? It really came down to trust, because I don't take it lightly. Like I've got my own reputation, but it's an even bigger kind of responsibility to be thinking about Brandon's reputation, because he's invested 15 years into building his platform, and now he's made the decision to use that platform for people to entrust their capital with us. And so we have lots of friends and family that have never invested in real estate that are investing in us, and we have a lot of people that through social media, through our books, they feel like they know us, and therefore they trust us. So even if I've never met them and I don't know them at all, if they read Crushing It, and people feel like they know you, and so they're comfortable giving you money. And even more so with Brandon, because of the reach of the Bigger Pockets podcast. And not a lot of people think of Brandon, like a lot of people know Brandon from the podcast, but Brandon's actually the best-selling author in the real estate books in the world. He's sold over 1 million copies of his books, and that's that's probably more extraordinary than most people realize. The vast majority of Brandon's net worth and like what he's achieved is actually as an author, even though he's more known for the podcast. He's an incredible author. He's very talented in that writer. And, you know, so that's all, you know, you have to take that very seriously. And so it's very difficult for us to get to the point where we were like, hey, you know, let's entrust our reputations and particularly Brandon's with a partner. But every interaction I've had with both Ben and Feras just gave me a sense of comfort, and they were at the top of the list. And they also, you know, we've seen things eye to eye in so many different ways. And I knew that they were partners who would really understand the value that we could bring and have the vision to think about what we could do together. And, you know, so when I reached out, Feras was receptive. And so we just had a series of meetings to explore it more. And that all culminated with an agreement to find a deal. And you know, it's just been amazing. So
I love that. I see you guys partner and I'm like, oh my God, that's like such an awesome partnership. And within 3 minutes of talking to Feras, I felt like he was like my best friend. He was just, you know, a wealth of information, so willing to share his knowledge and experience and expertise. I was like, oh my God, like, where have you been all my life? Right. So I can see why, Brian, you saw that in Feras. Feras, I have a very important next question, but before we do that, we're going to take a group selfie because our paparazzi needs to head out. So if everybody can turn your cameras on, and get ready and get pretty, we're going to take a group selfie here. Don, are you ready?
Yeah, I'm ready.
All right, let's do this. So Feras, my question is, how do you guys set up these partnerships? Can you speak on that a little bit?
I mean, yeah, Brian pretty much hit the nail on the head of all this, right? And I think it all boils down to trust and value, right? And it's just, you know, and me and Ben like to say, like, it's like your reputation, right? You know, something takes years to build up and it's the thing that could be lost in a minute kind of thing, right? And just knowing that, and even them trusting us with that. And now we feel like we're the beholder of that too. And we got to be buying the right deals, doing the right things, right? And like, I mean, Brian, you know, said I hadn't really even internalized it, that Brandon has spent 15 years building up his brand. So that's another piece of the equation. And, you know, you find partnerships where, you know, people plug each other's holes, right? Plug each other's gaps. And, you know, just to keep it clean, I apologize. And, you know, you add real value. And so I like this with Brian and Opendoor. I mean, we really couldn't have asked for a better partner, right? People that we like, know, and trust, and they can fill the gaps that we have, right? And so it's allowed us, you know, the thing I like to say, it's allowed us to buy deals that we may not have been able to buy anyways, right? Because right now, what we're seeing in the space, so especially the CB space is hyper competitive, right? And now a lot of that has trickled into the A space in some of these bigger metros. And that, you know, that $10 to $40 million range, that is hyper competitive, where some of these people are out there, they just need to do a deal. They're not really building a company. They don't care about, you know, performing. They're just there to do the deal. And, you know, if they ride the market, great. You know, if not, then oh well, right? And they'll pay up on pricing and that we can't get to, right? By having a good partner, you can buy a bigger deal, right? Because again, you're able to do the liquidity, the net worth, the balance sheet, the earnest money, the raise, all of the pieces. And so thus, you know, the way we've structured it essentially is, you know, Opendoor fills a lot of those things, and then we are the bearer of, okay, let's make sure this thing operates, right? And getting this thing performing and going out to the property. And me and Ben will just office out of it for, you know, once a week on the blue, just to see what's really going on, right? Because really what I've learned is the first 9 months are the hardest of any deal, right? You know, and being cognizant of that and trying to get the right things, the right people, the right office dynamic, the right impression, right? It's so critical. And every time I go out there, I pick up on something that's going on. And then I get back to the office, I start firing off emails, right? Like, what about this? What about this? What about that? And so, I mean, you know, so far, you know, it's been a good working relationship. And, you know, and me and Brian are just talking about us, but I mean, it's really both teams, like the whole teams click, right? Like it's what Brian said. Like the way me and Brian think we just get each other, right? Like, I don't have to explain everything to Brian. He doesn't have to explain it to me because we probably know what the other one is thinking. And similarly with the rest of the teams, right? Like the people that drive investor relations, they both get each other, right? And there's a lot of that kind of synergies. And so it's made it a very good partnership in that sense.
You guys both probably don't know this, but I was with Brandon in Maui like earlier this year, and we were driving to the beach, and it was a very casual conversation. And Brandon said to me casually, I honestly don't care about how much money I make out of any of my deals as long as my investors are happy, because I have built so much into putting my reputation together and building all of this on social media, that at the end of the day, it's about making them happy. It's not about how much I make at the end of the day. And that was profound to me because yes, we, all of us work hard, right? It's easy to find a deal. It's easy to find money. And honestly, it's even easy to go and operate a deal, but to actually be credible to thousands of people, I think when there's so much riffraff out there, like how do you stand out? I think that's so important. And then not just how do you stand out, but how do you continue to grow that? That's
yeah. And on that point, actually, I'll say this. So the reason I partnered with Ben on Disrupt Equity, who's my partner there, is we both saw the same thing, right? We both same thing, exactly what Brandon said. It's, we both have no problem giving up 100% of our equity to make sure the investors got made whole, because we're not in it to squeeze juice from a turnip. It's about doing 100 deals, building a real organization around it. And so it's no surprise to me that our Opendoor partners think the exact same way, right? I mean, it's take care of the investors, they'll take care of you. And challenges happen, right? And any operator that says otherwise is a liar. I mean, things happen on these deals, and it's about being resilient and working through them, right? I like to joke that Ben lost all of his hair from real estate, right? I mean, he's kind of bald, and he's been balding for 20 years, but there's a lot that happens, right? And same thing with Brian. I mean, managing apartments is no easier, probably no harder, no easier, probably even easier than managing mobile home parks. Like, stuff happens, and it's about taking care of it. And investors usually are cognizant of it, right? They get it. If a comet hits a mobile home park, like, that's not your fault, but you have to work through it, right? And hopefully that doesn't happen. But investors are usually reasonable people, but about explaining the problem and here's the path forward and the solution and working through it, right? And and I've seen partnerships implode where one partner wanted to make the investor whole, the other one said, no, let's just stick to what's in the operating agreement, and who cares if the investors took a risk and it's their fault, right? Like, that happens. So having people that think similar is very valuable in that sense.
Well, I appreciate that. That's great advice. Okay, so to end this, I have just a couple more questions, one to Brian, one to Feras. Brian, you did the ultra marathon, and we're all so proud of you. All our friends were there to support you. I was going through my own surgery and I wasn't able to make it, but what did that do to you just in terms of your mindset, and like, how did that grow you as a person?
Yeah, that's a great question, because when I went into it, I really wasn't thinking of that way. Like, it was something that I wanted to challenge myself, and it was an adventure. I applied to this program called Becoming Ultra, and it's a program that sets you up with a professional coach, and then they actually have you sign an agreement that you're going to chronicle your journey and share it with the world. And it's meant to kind of encourage other people to try running longer distances and kind of demystify that and motivate people. So that aspect of it ended up holding me very accountable. But it was good. It really helped me, like, chronicling it and sharing it with other people. I think that one of the biggest things that happened was that my coach would routinely, and I'm talking about practically every week, assign me something that I didn't think I was capable of. And I would go back to him and I would be like, I can't do that, or don't you realize how old I am? Like, what are you thinking? Like, I can't, and that's not, like, in the business world, that's not been who I am. Like, I'm always thinking big, but for some reason in other areas of my life, I didn't apply that same mindset. So I would go out and my coach was great. He would say, you know what, just try it. Like, just give it your best. If you have to walk some of it, you have to do like, just commit to going out there and giving it your best. And that's what I did. And what I found was just time after time after time, for months, I found myself doing things I was certain I could not do. And if you had asked me, hook me up to a lie detector at the beginning of the training program and said, do you think you're going to make it to the end? Do you think you're going to be able to run that distance? I would have said no. I was very hesitant to even, like, here I was having to publicly track my journey, and it was stressful because I was like, I don't even know if I could get to the starting line. And so it was great because I think that it reinforced, I've done since that time, I've done in a lot of my speaking engagements, I've placed more of an emphasis on mindset than ever before. Yeah. And it just gave me that even greater appreciation for the power of your mind and what a limiting factor your beliefs are. And so I believe that applies in all areas of your life. And I believe that everybody is constantly doing a self-evaluation about what they think they're capable of. And I think they're almost always thinking too small. I think almost everybody is capable of more than they think they're capable of. So that would be the number one takeaway from it. I'm a person who just trained myself to think big, and yet even from coming from that basis, the experience made me realize that even I, after I try to tell myself, like, even I underestimate maybe what I'm truly capable of. And I think that's true for everyone. So everyone on the call should be like thinking, hey, this is what I think I'm capable of. And then imagine if it's really true that it's actually,
that much more.
So that much more.
Oh my God, that just gave me chills. And I remember having this conversation with you. Brian actually did a TED Talk for us about running and the benefits of running. And it was one of my favorite TED Talks I've heard. And you and I had this conversation, and I was like, Brian, I can't run because I have a bad knee. And you were like, no, get it fixed and then start working on it. And you can do it. And so that's exactly what I did. And now I'm working on it, and hopefully we'll start running soon. But like, thank you for that. Thank you for leading us with that, because you're absolutely right. If you can do something, you can actually do much more of it. And
Brandon is a really big thinker too. And I think people know that, but Brandon's vision for Opendoor Capital was that within 3 years, it would grow to $50 million in assets. And we're on pace to surpass 500 million. So he was off by 10x in his own self-assessment of what he thought he was capable of doing. So, if you guys look, and you see Feras and me and Brandon and think that we've got it all together and we've got our mindset mastered, it's just an example that even we are probably underestimating what we can do. And so just, it happens to all of us.
And maybe just two things. For those of you that spend time with Brian in person, have him show you his pictures whenever he was a little younger, right? His before and after.
I was going to be like, Brian, will you show us your photos?
Oh man, Brian does not look like Brian. The running has, Brian is a very different looking person in the past. And then
Brian is my like real life Benjamin Button, and I say that to everybody. Just knowing him for 4 years and looking at him now, and then like just going back and looking at his photos from his younger days.
Yeah, and then maybe one side story. Brian, I joke with him about not staying at the West End here in Houston, because, he went there and, he went to the concierge and asked for where to go run, because again, Brian is very serious about his running, and she led him astray, right? Told him the wrong place and not a great path. And, in his mind, Houston's the worst running city in the world now. And, he's like, she should have known better. So,
okay, Feras, for you, where do you see the market now? Like, what kind of deals do you see yourself buying in 2022? With interest rates and inflation, if you were to just give me a quick overview, what would that be?
Yeah, so right now, let me pull out the crystal ball, right? Ultimately, a couple things. The cap rates between C and A class assets are extremely narrow, and it makes no sense. I mean, and even some of this stuff, because we're expanding into other markets and I'm starting to get more comfortable, right? Like I was in Orlando over the weekend and just trying to understand pricing and what makes sense there. But the main markets that we're in, you're seeing the cap rates of a C and an A almost the same. Like, I'm not even kidding, the same. And it's like, man, I'd rather pay another 10, 15 a door and buy an asset that is 50 years newer, right? So I'd have a lot less headaches. And so, that's point number one. Point number two, there's still a lot of liquidity in the market. And I mean, all of this money that got pumped in is going to continue to trickle up and trickle down, right? And so, I think real estate is going to continue to be a very attractive asset class 2022, right? You're going to see more and more money get smarter, right, and looking to deploy into things like real estate, right? Where it's, your CDs today are what, 0.2%, 0.5% tops kind of thing, right? Versus even the cap, you buy the best deal, on Main and Main, right? Best deal, best location, and you still get that at a 3 cap, right? And so what is the difference between a 0.3 and a 3%? That's 10x difference, right? So even if you overpay and you buy it at a 3 cap, right? Austin right now is reaching high 2s, right?
Wow.
And it's still, 10x better return than the CD. And so, I mean, ultimately, I think really, I don't see prices getting, a big drop in cap rates in the next year, right? And ultimately, this is where we've shifted a lot more of our acquisition criteria, right? Where we are looking at better assets, better location, and play it safer on the return side, but get into better quality assets that you can ride out. And if the market takes a dip, you're not caught kind of in the middle of a deep value add and in a rough area that's just, you overpaid for because you thought you're going to pop rents $500, right? And so, that coupled with just looking at those bigger deals, right? It's the same, it's really, even though it feels like we missed it, but it's the same kind of really think about it, the same kind of thing Brian was talking about with mobile home parks and institutional, right? There is more institutional money today looking at all this stuff. I mean, it's insane. Like the deal we're buying now, I mean, there's like a deal that is worse than it that I was just looking at. We thought we were going to be competitive on the pricing this week. And some Yahoo came in and is offering, another 10% more than what we offered on our deal that I think is a better. So you're seeing that, right? There's a lot of, so cap rates will compress, and we've been looking at getting into better assets, right? Where I pay a little more price per door, but you're getting a much higher quality asset that ultimately you're not going to burn all the money doing. Because the thing that people don't talk about a lot, right? And I was actually talking this with our controller CFO today, because he didn't come from real estate. He came from corporate, big company accounting and finance, and they help build accounting departments for smaller companies. And we were talking about the fact that I just lost my train of thought. Shoot, what was I just saying?
That you were just talking to someone on your team?
No, yeah, I just lost my train of thought about, I was going to say something about cap rates. The fact that right now, so the thing, it's an industry norm to talk about how do you value a property, right? What is NOI? NOI is the revenue plus the known expenses. But what gets ignored is all the stuff that's below the line that actually impacts returns. And all these people get fooled into this story, right? And, because like it's a perfect example. I have, let's say I buy a property and 100% of the ACs are defunct, right? That's never going to impact the NOI. So valuation is going to stay high. It's going to look good. Why? Because ACs is considered a CapEx item. It goes below the line, below NOI. And so but then that deal is never going to produce cash flow because you're burning it all in ACs, right? Like we had a deal where we literally spent 40 grand on replacing ACs one summer, right? Like 1 week, right? Like that. And so being smarter about those kinds of things and understanding those dynamics that are a little bit harder. So that's where, I'd rather pay a little more for a better quality asset because you're probably going to get more returns anyways. So that's maybe my long-winded answer.
Great advice. And I did like the apartments that you just closed on Cheval, right?
Yeah, closing at the end of December.
Beautiful property. Stunning. It looks like a resort.
It does. I like to say it's like the Ritz.
Yeah, I'm like, well, I want to own a piece of that, like that's amazing. So you guys, we have another 10 minutes to take questions. We'll probably get to about 2, maybe 3 questions. So if you have a question, just, raise your hand. If you go down, look at the bottom bar in reactions, you can raise hand. So go there, raise your hands, and then we'll call you on, and then have these guys answer questions. All right, there we go. Bala, go ahead. Unmute yourself and ask your question.
I wanted to understand how to actually evaluate a multifamily valuation. So when a wholesaler comes to me and says, hey, this is a valuation for the house, this is how much it'll actually cost, and after renovation value is so much, right? Like I have been calling different appraisers to understand what the appraisal value for a property is. And everyone says we work with banks, right? Like, how do people go on appraising stuff like that? Like, it's really hard to appraise a multifamily property.
So that's a very loaded question, right?
I say keep it high level.
It's all in the eye of the beholder, right? So the reason cap rates exist is because it gives people a mechanism to compare like for like properties. Houses is easy because you just look at the comps of that neighborhood. You can get within plus or minus 5%. Cap rate is kind of that thing. So like I said a second ago, cap rates in Austin have approached the high 2s. So you're at a 2.9, 2.8% cap rate on, BA assets. And so if you're paying 2%, you're overpaying. If you're paying 4%, you might be getting a deal. But this is where it goes back to the unwritten rule of how do you value NOI, right? And what things should be, normalized and what things shouldn't. That's one thing of it. The other big part of it is what is the story, and and I'll give you an example. Technically, a deal that produces 0 cash flow, what's that worth? It's $0, right? Because if you think about it, valuation equals cap rate equals NOI over value. If NOI is 0, no matter what I do, the value is 0. That deal is not worth $0, people. It's worth something, right? And so because someone can come in, spend money, get the units online, get it revenue producing. And so then it goes to, okay, what is that in the eye of that beholder, right? And so then someone's going to come in and say, well, I'm going to come in, I'm going to put 50,000 a unit into the units to get them online, right? Well, I need to be able to sell that $50,000 per unit. I want at least a 40% return on my time and money. So therefore, I need to be able to sell this deal at 90 a door, right? To be able to actually, make the returns that I want. And so if I'm selling it at least at 90 spread, maybe if I pay 10 and I can sell it for 100, I got the 90 spread, right? Or if I pay 50 and I sell it 140, I got that 90 spread. And so it's really more, and that's the indirect way to do it, right? But ultimately, the way we underwrite today is we look at the financials of where the deal is today, right? And we look at what money can we bring into it and improve the returns, and how much effort bringing that money and improving the returns is and doesn't make sense. Because like I said, bringing down units online is a lot more work than, hey, I'm just going to go in, operate a little bit better, put a backsplash, put some new flooring and call it a day.
You guys, thank you all for being here, especially, the Donis brothers, Feras, Brian. Thank you so much. And I really cannot tell you how much I appreciate your time.
From Feras Multifamily, Moussa, and Brian Big Baller Murray signing off.
Yeah, I love that. Awesome.
That's awesome.